Today I want to share why I've moved about 10 to 20% of my stocks in my portfolio over to cyclical stocks. Yes, I've rotated over to cyclical stocks, moving slightly away from tech. And here in this video, I want to give you my reasons why. It's short term, it's all about performance, and we have to follow the trends. So this video is not for everyone. If you're a committed tech investor who can actually stomach the next 6 to 9 months of your tech stock not moving, not gaining, then this video is not for you. If you want dollar cost average and just buy on the cheap and you think this is the best time to buy because performance will show at a later stage of 2021 or 2022, then this video is not for you. If you are a person that during really slow tech growth time are swing trading or option trading to gain the marginal growth, to gain the performance, again, this video is not for you. This video is only for the ones who are managing a portfolio, who less time to manage, more passive, but wants that yearly grow yield in the year 2021 where it's supposed to be the great bull recovery market run. Then this is the video for you. And then this is why I want to show you the first 3 reasons why I'm rotating on my Etoro account to diversify about 10 to 20% more on the cyclical stocks. Yes, I'm rotating into cyclical stocks so I can gain that performance while the tech stocks will be sleeping for the next 2 or 3 quarters. So very first reason why I'm rotating 10 to 20% of my tech stocks on my Etoro portfolio and diversify slightly to the cyclical stocks, rotating over to cyclical stocks, is because this recovery stocks will do better in the next 2 quarters or 3 quarters than the technology stocks. And you can see in this chart here, the oil, the banks, they're still lagging behind growth. Those stocks that is in the DGI, the industrial stocks, are still lagging behind the tech stocks. We're in a recovery state, great, things will go up, VIX will come down, but then these stocks are lagging. That's why it's best to go in because they have a better performance yield over the next few months. And when the earnings come out in the Q2, Q3, they will be far better off than the tech stocks. And the second reason why I'm rotating for the short-term basis is because tech stocks are overvalued. Tech stocks have already been priced in for the 2021 pricing. I've worked in the likes of Fiverr, the AMD, the Teslas. They're all already priced in for a very good 2021 year. But you're not going to see any more future movement until at least Q3 or Q4 earnings. Okay, the likes of Amazon, the likes of Etsy, the likes of Tesla, all the final year, Q2, Q3, and Q4 earnings are the one they're going to start performing. That's when they're going to start beating records, and that's when the share price will start going up. For now, they're going to stay stagnant, they're going to stay sideways. So that's the second reason why I'm moving temporarily to cyclical stocks to rotate them just to get the gains. And once I'm ready, I'm going to switch back. And reason number 3, it's easy. It's just for short term. Okay, we're all here to manage our portfolio, manage our risk. It's just for short term rotation until Q3, Q4, like I said earlier. The thing is, are we in for the dividends? No, we're not in for the dividends. We're in for the risk management. Because at the end of the day, if you realize that whenever the Nasdaq dropped 1%, your tech stock most likely dropped 2 to 3% overall. Okay, the Nasdaq drops 2%, is a factor of multiple 2 to 3, depending on what stock you're having, because you're most probably having a growth or hyper growth stocks. So it's the way that it's coming that it's going to go sideways for all this while. So it's best just to dampen the portfolio and move the cost a bit. And I'm going to show you later on that what I've done on my Etoro has actually proven the fact that I've dampened and performed better than the Nasdaq. And hopefully overall, I may beat the Nasdaq for the short-term basis. So now I want to show you the experimental that I've done. Okay, I'm quite convinced myself, and after last Friday, it's pretty convinced that I think it's working. With this 10 to 20%, I'm not asking myself to move across 50 to 60% or to sell out my tech stocks. No, I'm just moving a bit. I took profit over this higher risk, hyper growth stocks, shuffle across just to dampen that volatility. So on my Etoro account, I previously, like I said, when Nasdaq hits 1%, I can see my Tesla stocks drop 2, 3, 4, 5. Some of my Fiverr stocks will drop 7, 8% in a single day. And overall, I'll just lose so much in a single day. And if it drops again, the same has happened. And then during the middle of February, I started rotating 25% of my growth stocks into cyclicals. I started buying XLE, OIH, oil companies. I started buying Chevron. I started buying BA, JP Morgan. I started buying more ABNB because it's opening up. I started buying more McDonald's. So I started to dampen the portfolio because these stocks don't move so much in a day. Dow Jones Index will perform more better in the next 6 months. Okay, I'm not saying I've got a crystal ball, but from the lagger behind, there's more likelihood that the DJI will break away more than the Nasdaq trying to break away to all-time high. So the roles has swapped, maybe short-term, maybe long-term, but for now the roles has obviously swapped because investors, institutional investors, are ready to buy into these recovery stocks. You must be thinking, what are the other areas of recovery? Where else can we cycle? This is my one that I'm sharing with you. I think that the oil stocks, the OIH, the service company, the Halliburton, the Schlumberger, all the Chevron and Total stocks are still a room to climb. Think about it. During the lockdown, this company's expenditure and expenses and manpower, they all started reducing. So over the course of the year, they have learned, they've adapted in low oil environment, they've adapted their expenditure in low oil environment, and from here they're going to move forward. So now and for the forward coming quarter earnings, they will have lower costs and hopefully higher oil price will boost a bit more revenue, and the net profit and net gain will be higher. So we're seeing room for growth for these companies. Second one, I still see room for pockets of growth is the UK, the France, and the Hong Kong industry. The American tech stocks have soared up so high. The Chinese, the Japanese, the German market has recovered very, very well. But I still see pockets for UK FTSE, the France CAC 40, luxury stocks, industrial stocks, the Hong Kong stock, which have been better in 2019, has still room for growth. Next one is entertainment stocks like hotels and casinos. Those stocks will be opening up, and those where Disneyland, Disney Paris, they'll start opening and people start visiting. Potentially you see more revenue growth because people are now ready to go out. And the next one is industrials. Industrial, you need to pick and choose. For me, I've picked personally myself the BA, Boeing, I've picked Airbus, I've picked Lockheed Martin. Those are the ones that I pick myself because I think they're going to employ high-skilled workers back in, and then starts growing. End of the day, this is what I've done with my Etoro. That's what I've done. I think it's happening just now. It's successful. I'm quite happy where I am just now. So this is where I'm going to stand. So while time gets along, this is the performance that I want to yield. This is the performance I want to protect my gains. But if you are one of those tech investors who are just focusing on tech for long term, I know 5 years, 10 years, tech stocks, I'll put my hand up as well. Tech stocks will perform better than the cyclical stocks, okay? Tech stocks will perform better than likes of bank stocks, JP Morgan, the oil, definitely 100%. But it's just for the short term. This is what I just want to share my personal message to you guys, that for the short term, it's okay to rotate for the short term. And once the tech Q3, Q4 earnings starts beating quarters again, expectation going through the roof, then start rotating in. This is where I'm coming from. This is what I'm sharing. So please do your own research. If you do enjoy this video and hope to see you more in future. Like and subscribe and take care. I hope you've enjoyed that video.
Please like the video and please subscribe to the channel.
And hope to see you soon. Bye.